What's up, Struggling Nation? This is Unreal bringing you last week's recaps. What's up, Struggling Nation? This is Unreal bringing you last week's recap. So, just a reminder, my account was locked due to the $25,000 restrictions. I took more than three trades in 1 week. I showed y'all the last video how they locked my account, the warning that you all might see if you trade more than 3 times in the week. And when I say trade 3 times, is buy and sell within the same day, within that week. If you do it more than 3 times and you have under that 25K limit, they'll lock your account. So that's what they did with me. They locked my account, which was all good. I was a little upset at first, but then I thought about it. I said, you know what? This is another opportunity for me to home in and practice on my skills and perfect my skills as far as reading price action. So now my price action reading has to be more on par to be able to read when to enter, to be able to swing trade. So the only way I could really trade right now is swing trade. I could buy something the day before, hold it for a couple days, and then sell. Hopefully for a profit, not a loss. I tried 2 strategies last week. My first strategy, swing traded a SPY on Monday, sold it on Tuesday at the open of the bell. When I saw price action was starting to reverse on me, I made $3,000 profit. Great way to start the week off. 1 trade, didn't even have to really trade the rest of the week. I tried another strategy to see if it'll work. Tried another strategy later on in the week, ended up losing about $560, $570. So all in all, I ended the week with around $2,500 in profit, 24 and some change. Not bad at all now that I have to resort to swing trade. Little harder, a little tougher to do. You got to be able to read price action and be able to enter at the right spot. So you enter low to be able to sell high, to be able to maximize on profit. So that's what I did last week. I've been trying to dibble and dabble on different strategies to prepare myself for this week. I took another trade this week, but we'll talk about that on the next video. So far, we're going to focus on the last video, last week's trades. So I'm going to try to see if I can do a screen share. So just kind of take you into my mental going into the trade on Monday. If you know, I think the week before that, SPY had lost in 1 day sell-off $1 trillion. $1 trillion was pulled out of SPY in 1 day. I think they said one of the biggest losses in last 10 or 15 years or something like that, they were saying, if I'm correct as far as time. But it was the biggest sell-off in a long time on SPY. $1 trillion was pulled out. Imagine that. That's probably bigger than most countries' GDP. Crazy amount of money was taken out of the SPY. So my mental going into the trade on Monday, start of the week, I saw that price action was range trading. It was kind of trading sideways, but at the same time was making lower highs the whole day. It was making lower highs and higher highs, but it wasn't moving a lot because it wasn't a lot of volume in SPY that day. So when I saw this before the day closed, I still saw it make the last final lower high And I said, well, I'm gonna enter there. It's a good spot to enter. I entered around 2 o'clock before the market closed. And then I sold Tuesday at the open when I saw market was gonna reverse on me. Saw the market open on Tuesday, large green candle, followed by a red candle. I got out. That was just price action telling me it could reverse, go down, which ended up happening. I'm gonna do a screen share of that play, and then I'm gonna do a screen share of the other strategy that I used when I took the L for about 560. I was actually comfortable with taking that 560 because, you know, now that my account is locked, once I make a trade, I can't sell. If I sell, it's gonna further put more restrictions on my account. I gotta pretty much take the L. So the amount that I took, that I was willing to risk on the trade that I took where I lost the 560, it's a pretty big number, but I was okay with losing that amount to try this strategy. Remember, to me, losing money and in the form of investing it is the best money spent, the best money lost. Better than buying a pair of shoes, like I said before or in previous videos. Got plenty of shoes, you know, and if I could take that money that I spent buying shoes and invested it, where would I be at today? So you can't look at it as scare money doesn't make any money. You gotta spend. So I was willing to spend that 560 to try this strategy to see if it worked. It didn't work, but I tried it anyway. And actually, that strategy that I tried actually almost worked. Just price action reversed on me and I couldn't exit it. And I saw where I was gonna exit at, but I couldn't because I didn't want to put further restrictions on my account. You will be susceptible to more restrictions on your account if you're locked after not having the 25K, and then you continue to try to day trade. They will put further restrictions on there where now you can't even buy nor sell. I mean, so I didn't want to deal with the hassle. I'm okay with swing trading, and I'm okay with it making me perfect my price action reading skills. I gotta be able to read price action a whole lot better now than before to be able to take a trade and hold it for a day or two to try to get a profit, especially the way the market is right now, because we're in a bear market. One thing I want to correct, and this is how I see the market struggling, nation. Hope this helps you, but the media has always been an avenue to distribute news in the way they want you to see it and in the way they want you to receive it and hear it. So you'll hear the media constantly say, or use words like market crash, depression, market crash. Those kind of words for me creates chaos. Now that I'm an investor and now that I'm investing, I see that those words are used to discourage you and distract you from the bigger picture. So when you use words like crash and depression, it just makes certain people who aren't investors scared and they pull their money out. What I see with everything that's going on in the world as a new trader, now this is just my opinion. You got a right to disagree or agree. This is just my opinion. I wanted to share this opinion with you all, new traders out there. What I see is with everything that's going on with the war, inflation, interest rates, everything that's going on, before all this hit, it was a lot of new traders such as myself, such as yourself, that got into the market. A lot of people put a lot of money in, didn't know, was trying to make money, looking for other ways to make money during COVID. A lot of people got in. And just like they lost that money, a lot of people got out. So a lot of the money that I see, not only from the institutions that are trying to secure profits and trying to keep from losing profits, and they're taking money out and putting it in other vehicles, institutions are still investing. See what I'm saying? Us, the retail traders, we're the ones that are pulling out because we don't have enough knowledge to say, oh, it's other vehicles in the market that you can put your money in to create wealth and not lose. Not all avenues of the market is losing. So it's other ways in there that you could find to make money. So when they say crash, I think is a way to scare us as individuals, as people, to keep us out of making money. And then you wonder why you always hear that saying, like, if I had bought Apple back when they started, if I bought Microsoft back, if I had bought Bitcoin, you know, stop using those terms and just stay in there and keep buying. You know, right now everything is cheap. It's what I see as a new trader, sharing information to new traders out there. I'm not financial planner. I don't have no financial degrees. I'm just sharing my experience from beginner to successful trader. And this is what I see is a perfect opportunity right now to buy. Perfect opportunity. If you have money, start dumping money in there. Instead of going out here shopping and buying unnecessary things that you don't need, name brand clothes that you don't need, buy some shares of these companies that are out there that are a lot cheaper to get right now. You know, PayPal, Netflix, Apple, Microsoft, you name it, Nike. Pick a company, whatever it is you choose to, you want to invest your money in. AT&T, buy some shares of them and just keep racking up on the shares right now while they're cheap, because eventually they will go back up. They always do. You got to think the history that these companies got, they're just not going to fail. These companies are too big to lose. And if you go off what the media says, the media will always keep you in fear. That's why we as a people can never unite. We'll never unite as a people. Black, white, Chinese, red, I don't care what you are out there. We'll never unite, because as long as they keep us divided, they keep us controlled. So we have to be smarter. Don't let words like crash, depression, steer you away from your future. If this is what you want to do and you feel like you can be good at it, I believe that you can be good at it, keep investing, keep buying it while it's low, and rack up as many shares as you can, so when the time that goes up, you can sit back and laugh. Hopefully this video helps. So I'm gonna do the screen sharing real quick, just to show you where I got in and what I was looking at. Hope this helps. Let's go into Monday's trade. Up, retested that gap area, this small little gap here, came down, bounced at this level twice. I drew this support line from Friday. Friday price action came down here and bounced a couple times before it shot up. So I saw that, drew the support line from Fridays into Monday. This probably maybe the first half hour of the day. On Monday, I saw price action bounce twice here and go up. So, well, let me read price action so I can time my entry into the market, see where I can enter and hold, maybe for the next day sell, or maybe for the next 2 or 3 days, see how long I can hold, maybe sell, depending on how much profit I'm making, or, you know, had I hit my profit target. So I saw price action come down to the support line and bounce. Came down and kind of retest that line again and bounce. Let me draw this line all the way across. This is how I was watching it. Came down near it, bounced up. Came down here, tested the moving averages, bounced up, tested the moving average, bounced up, tested the moving average. Now, what I saw price action, this is around the time where I bought over here. So what made me buy here was, saw price action making lower highs, 1, 2, 3, 4. Making higher highs, 1, 2, 3, 4. All day. I saw this. I saw price action moving this way, so that let me know, okay, it's a possibility that the next day price could continue to go up, being that we were in the sell-off and then in the bear market. I said maybe price action move up a little bit. The institutions want to move up price a little bit, and maybe for a quick profit, or move up and then take it down, which what they end up doing the next day. So I saw this and I entered when it pulled back and it failed to go below this lower high here. Let me draw another line here. Failed to close below this lower high here. I said price action is going to shoot up the next day. I bought right here. Brought right here at this bounce. The next day, price gap. Look at this huge gap. Price opened up here, shot up. Saw this play out. Then I saw the next play come in and not continue to go up. When I saw that, I sold. I sold right into momentum. Remember, anytime you sell, you want to sell momentum. It's just easier and better, and it's a way to retain your profits and get out of your contracts quicker. So I sold into momentum. Price went into momentum and then sold off. That's how I took my swing trade on Monday going into Tuesday last week, based on how I was reading price action throughout the day. All right, let's get into Friday's trade. So remember I said that I took 2 trades only. I can only swing trade right now till I get this 25K in this account, so I'll be able to trade every day again without restrictions. So I took Friday was a Monday going into Tuesday was a swing trade, a strategy that I was trying based on reading price action. It worked, netted me $3 profit. Friday I took a trade. I try to trade the close of the bell with an expiring contract. If you're a new trader out there, if you want to try this or you thought about trying this, this is what I did. This is what happened with me. I traded, lost, took a $500. When they say it's a $560 loss, that I was okay with losing. It still is a lot of money, but I was okay with losing because, like I said, any money that I'm trying to invest in to make money, I don't want to lose it. But if I lose it, I'm okay with losing it. So Friday, I bought a put contract. Friday, the market came in and it was on a sell-off. I said, oh man, this might be another sell-off day like it was the week before where SPY took a $1 trillion loss. Well, $1 trillion came out of the SPY. I want to say they took a loss, but $1 trillion came out. Whether investors or institutions took the money out and put it somewhere else, or they purposely wanted to drive the money down. Because remember, one thing that I've learned from day trading every day is that institutions, they're not just going to give you the blueprint to say, if price is going up, this is what it is and anybody could trade it. No, they're going to psych you out every single step of the way. They know that they're going to push price up, but the way they push price up is in a way to shake you off so you don't get money, and they could take your profits on the way up in the move that they're going to do anyway. So they're so slick and they're so smart at how they do it. But as long as we trade with them and catch those moves, we'll always make money. You're going to lose money because this is part of the game, but you can make more than you lose. So going into Friday's trade, I saw Friday was a sell-off, just a straight sell-off. I said, well, it has a possibility of selling off. When I saw the sell-off, and like I said, I wanted to try the strategy, buy an expiring contract and play the close of the bell, because usually the close either shoots up or shoots down. When they got close to the close, around 152 is when my trade was accepted. But just before that, as price action is shooting down, the whole day shooting down, all the way until almost 2 o'clock, they had a slight pullback, which what I saw as a new trader, I saw trap, to trap the bulls, to trap those who think that the market is going to reverse, especially the way it sold off. Price action pulled back up like it was going to reverse and go into a bull trend, and then pull back down. As it pulled back down, that was my strategy to get in. It hit 3 of my factors. Remember, I always look for 3 factors during their trade. Hit my factor, broke a trend line, pull back, price action reading. So I pulled back, I entered for a put contract. Well, it went down, it was going in my favor, but what it did, it created a lower high, and then it started shooting back up. And that's why I lost my money. And I couldn't sell because I didn't want to restrict my account more. But let me go into screen sharing so you can see what I mean as far as what happened on Friday. Okay, so this is price action on Friday. Price action came in, green candle, you think it's gonna shoot up. Came up here, this was the high of the day right here. This was the high of the day Friday, the first 20 minutes of the day. This was the high that was created. After that, price action came down, range traded for a little bit, shot down. Range traded, shot down. This is what I'm looking at. Range traded, try to pull back a little bit, shot down. Range traded, shot down. This is midday going into 2 o'clock, right around here. I saw this. Created a double bottom, pullback. When I saw this pullback, I said this might be a trap, a bull trap. Price action is going to continue in the direction that it was, which was a sell-off. The bears were in control. Saw this pullback, waited for the pullback to exhaust itself. On the way down, I entered right around here. After this was my confirmation candle. This was the first pullback. I entered on this confirmation candle. Everything was going good. Went sideways, going good, until it created this lower high here. Draw a line here. There. Right here. As you can see, this is the low of the day. This is the high of the day. So it created this low, came up here for this pullback, which I thought was a bull trap, wasn't. Came back down, created a lower high. I said, oh man, price action gonna go in the opposite direction. I saw the play develop because it didn't continue. It didn't psych me out. It didn't come up, do a small test up here and then continue down. No, it created this lower high and went sideways, shot up, went higher than the previous higher high, came back down, created a lower high again right here. Draw another trend line so you can see it. See, first low of the day, then the lower high, then another lower high, and just straight up. So that's why I took the L on Friday. Had I waited a little longer, since my whole plan, my whole strategy in Friday was to play the close of the bell, I could actually waited another hour or two and saw this develop here and saw what was happening, saw it creating these lower highs and these higher highs, and said, okay, price action might reverse all the way into the close of the bell and just get a scalper's profit. And man, this would have been sweet profit. And they're right here on this confirmation candle, the second candle. Right here where it failed to continue to go down, waited for confirmation. This candle's not confirmation, this doji candle is not confirmation, but here, I would have entered here just to see what it was gonna do me, what price action was gonna do, testing my my strategy, and look, all this profit going into the close. I had to net it easy. But the strategy that I played didn't work. I entered too early, that's all it was. So hope this helps. Hope this takes your trading to the next level. This is Unreal, sharing last week's recap to struggling traders out there and new traders out there, coming from a new trader to new traders. Hoping my point of view helps answer some of the questions that you're gonna have as new traders. I know one thing I struggled with as a new trader was what time frame to use. So I plot everything the day before on the daily time frame. So I look at the daily, the weekly, and the monthly just to get a feel for where price action is going, and draw some support, some resistance line, and some trend lines to kind of give me an idea of where price action is going. Then I break everything down into the daily. I look at the daily and see what happens, where price had bounced, look back to set some support lines in previous days before price came down to a certain point and bounced, draw a trend line there. And then I break it down into the hourly, half hour, 15 minutes, and 5 minutes. I struggle with that. I just didn't know what time frame to use. But now this is how I home in my skills, and I perfect my skills is looking at those time frames. When I trade during the day, I'm trading the 5 minute. I'm looking at the 5 minute all day. Now, to confirm where I want to enter into a trade based on what price action is showing me, to kind of let me know like, okay, price action's moving in the way where I want to enter, I'll go back and look at the 15 minute, then I'll go back and look at the 30 minute, then I'll go back and look at the hour. This is just me, this is just my strategy. I'm not saying it's gonna work for you, but it's working for me to help me read price action better. I look at all that, if everything looks the same, then I go ahead and enter based on where I set my points to enter and exit. And when I say exit, it's to take profits, but I'll enter. That helps and has helped me. But most of the day I stay focused in on what's happening in the 5 minute. 5 minute moves fast. You got to be able to move fast with it. You know, it just market could reverse, snap of a finger is all the institutions, what they want to do and where they want to move the money to. So just be mindful that they're gonna always throw a curveball, a slider, a knuckleball, something in there to throw you off, because they're never gonna give you the play. They're not gonna give you their playbook and say, this is what we're gonna do today. If they did that, every single human being on this earth would be rich that wanted to play the market. Be that easy. They're not gonna do that. They're gonna make you work for it. They're gonna throw all kinds of curveballs to throw you off so they could take your money and at the same time on the way up make profits, because remember, the institutions are the only one that can move these candles. We cannot as retailers. This is Unreal, sharing last week's recap, throwing in some motivation in there. Hopefully it helps motivate you new traders out there. Take your trading to the next level. Please like, share, subscribe. Any comments, any information you may want to know, reach out to me. See y'all in the next one.